to avoid order block failure. And when I'm talking about order block failure, I'm referring to both order block, support and resistance, supply and demand. At the end of this video, you'll be able to realize what to do in order to avoid order block failure. And also, you will be able to know how to identify the right order block and how you can take advantage of them. So let's dive into the video. The time frame we'll be using is a 4-hour time frame. Okay, so for you to mark out your order blocks, support and resistance, you can use from 1 hour time frame and above. That is 1 hour, 4 hour, daily, weekly to monthly time frame, depending on what suits you. And for you to make your entry, you can move to the lower time frame from 30 to the 5-minute time frame in order for you to find your entry. In our previous video, we've discussed already on how we can identify our order blocks, a valid order block. And we said for us to identify a valid order block, we need to identify our structural point. And each of these valid zones is characterized by two indicators. One, we want to see a liquidity sweep. Two, we want to see an impulsive move, with an institutional move from that zone. So let's look at what we have for today. In today's video, we want to look at how do we avoid order block failure. Number one of the reasons why some order block cannot hold is because they are against the market structure. Some order block are against the market structure, and for that reason it cannot hold. For instance, I know in a normal trading you will mark this zone as your level of resistance, right? And you also mark this one as well as your resistance. And of course, this is point 1, this is point 2. So you believe that this is a strong zone of resistance. So you will mark it as your resistance. And having marked this zone as your resistance, you realize that when price came to this zone, it gave you a second touch which confirmed that yes, this is a resistance. But you see, when price came towards the second time, price break through that level of resistance which you have marked, or that level of order block which you have marked. I'm referring to this level now with the horizontal line. So depending on whatever you have marked this level here and here to be, you can see that when price came, price break through it. The reason why price break through this level is because this order block, this resistance or this supply zone is against the market trend, and because it's against the trend, it cannot hold. Then secondly, there is a liquidity sitting on this zone. Okay, so another reason why this will not hold is because of liquidity. So this is looking more like a double top. So this is a double top. This is the first top and this is the second top. So this is a double top. And above every top, we have a liquidity that is sitting there. So this price drive in order to take the liquidity that is sitting at this top side. And that is why that level of resistance cannot hold. One, it is against the trend. Secondly, there is a liquidity that is sitting above that level. Okay, and you can see that this particular one now, you see that it is holding price for a while now. Why? Because it is in the direction of the trend, and that is why you see it playing out in this manner. It's in the direction of the trend. So if you are to connect your trend line, you will see that everything around this zone is playing out Why? Because they are playing out in accordance to the direction of the price. So even if you have marked your support and resistance, you must bear in mind that those areas of support and resistance, at any point when it is against the trend, it will not hold. It won't be able to withstand the price. It will only work when it is in favor of the trend. For instance, we have this one here. So this particular one works out. This price pull back into this zone and it reverses a little. Why? Because it is in line with the trend. Okay, it is in line with the trend, and at the same time you can see the pressure of the candle. It is an institutional movement. Okay, then the reason why others break as well is because they are not created by institution. So the retail order blocks cannot hold price. So it will take the institution to be able to hold price. Okay, no retail order blocks will be able to hold price. Looking at this one, you can choose to mark out this zone here as your area of support, and the case may be resistant. I beg your pardon. Here too as the area of resistance, right? But this zone cannot hold. This particular here, this one fails. Why? Because this is more like a double top. So there is a liquidity sitting here, and this liquidity was taken in order for price to mitigate this order block. Okay, then another reason why some will fail, just as these ones that fail here, just like this one, is because there is an order block. When it is close to an institutional candle, it will fail. More also, if there is an imbalance ahead of it, it will equally fail. It won't be able to withstand the pressure because price will rally in order to fill up the imbalance. Now, look at this particular level. All of this level of support here could not hold. Why? Because they are liquidity zone. So this impulsive move take away all of this liquidity that are lying here. So price could not be rejected if you are to take support and resistance at that zone. But if you are to mark this zone, if the zone you mark is this particular zone, if this is the zone that you mark, you can see what happened. Price came down to this zone, went back, tapped into this other block. You can see it. If you have marked this zone as your resistance, you see how price came, respected it, and begin to go to the downside. Why? Because liquidity has been taken by the movement from that zone, and that confirmed it to be a valid zone, and for that reason it was able to reverse price. So now you know why your zones fail why some don't fail. So next time when you want to mark your support and resistance, you need to make sure that one, your support and resistance is not against the trend. Your order block is not against the trend, because it will fail if it is against the trend. Secondly, make sure that there is no liquidity lying there. Okay, because for an uptrend, it is only permitted to take liquidity of the higher high, but not liquidity of the higher low. Once liquidity of the higher low is taken, it's a break of structure. And for a downtrend, it is permitted to take liquidity on the downside, which is the lower low. It is not permitted to take liquidity of the lower high. Once liquidity of the lower high is taken, it's a break of structure. And the subsequent video will be discussing how you can find entries and take advantage of this on your lower time frame. I believe you have learned something new. Do not forget to like, share, and subscribe to this channel.